Good evening, everyone. Thank you for joining us tonight on a very special project that is near and dear for me and Wes and the rest of the team. This new opportunity is in Oklahoma City. This is my first love in the US when I landed in 2004. And we love Oklahoma City, and we'll tell you a lot about Oklahoma City. This is a unique niche development project, lifestyle, active senior living, construction, ground up development, if you will, in Oklahoma City. Before we get started, we always like to go through the disclaimers. This is a confidential business plan that is presented to our investors only. So if anyone has any questions on the deal, we're happy to answer it, but we always encourage everyone to consult with their financial advisor and or attorney or CPA as well, and not distribute this information to their friends and family without consulting with the InvestStream team. A lot of what we have in this presentation has a lot of forward forecasts and projections. We will share everything we know about the deal. We will share our assumptions, and we'll let you decide if this is a good fit for you or not. This is a 506B offering, which means that this deal is open to accredited and sophisticated investors. And this is not a public deal. This is a private offering. With that out of the way, I will start with the executive summary. This is an active senior living ground up development project in Oklahoma City. We have purchased 6.1 acres in the northwest corner of Oklahoma City, and we're planning to build this active senior living community. We anticipate it to be around 65 to 70 units with an additional 1.3 acres that came with our purchase that we intend to sell. And it's already actually listed with CBRE. It's on the market. This is a 55 plus active senior living, so it's not an assisted living. And we're going to communicate and talk about that in details. A very good location. We love the location, surrounded by medical offices, hospitals, parks, churches, and other senior communities. So we're not pioneering in a new area. This is a very good area in Oklahoma City, and it's already made for these kind of products. The total raise for this project will be around $2.9 million. What we love about this asset class, vacancy is almost non-existent in the market for this asset type, and the rent is premium. So we've seen rent almost 125% of the highest rent of Class A apartments in the city. So it's commanding a very good premium rent. The vacancy is not there, and the demand is very high. This project will offer 15% annualized preferred return for a very short hold period compared to other real estate projects. It's only going to be 15 to 18 months for this phase of the investment. Also, for this phase of the investment, we will not have any debt. So this is a cash only deal, equity only deal. And we will tell you what we're going to do in phase two. But for phase one, there's no debt risk on this deal, and we like that. And the minimum investment will be $50,000. So now I'll switch to why we like this deal and why we encourage people to invest in it. I'll start with the location. Oklahoma City. I came to the United States in 2004. That's where my family was. And Oklahoma City has been improving and developing at a rapid rate. I remember it was a slow and steady market. It's still in a way slow and steady market, but there's a lot going for Oklahoma City right now. Amongst the many good attributes of Oklahoma City now is it's becoming a top destination for retirement. It's a friendly city, conservative community, low cost of living, safe, activity rich, and it's becoming more and more a vibrant cultural hub compared to the surrounding states. I talked about the safety. It has one of the lowest crimes in the states, and residents have access to top class amenities, facilities, and parks, which makes it great. There's great demand for this asset class. We are building a niche development, which is specifically for active seniors, 55 plus. We don't see a lot of supply in the market. There's a strong demand and strong absorption of any new development that happens similar to what we're trying to build here. And in many of the comps or comparable communities that we investigated, many of those are on wait list. And one of them actually is on 6 months wait list. So that's kind of unheard of in this day and age in real estate. And that's why we love it. So the demand is there and the supply is almost minimal to non-existent. We are working with a very experienced team in Oklahoma City, including my mentor and uncle, Wes Salus, who's on the ground, have seen those communities develop over the years. He is a real estate developer himself, and we're bringing the best general contractors, architecture firm, and engineering firm in town to make sure we're delivering to the expectation of this huge demand. What we love also about this project is the flexibility. We already bought the land significantly below market price. In fact, it's actually 60% discounted, and I'll tell you the story in a minute about how we got to win in that market. We're also offering a flexibility for our investors to exit after phase one or continue their investment into phase two, and with full tax deferment benefit. So it almost has a built-in 1031 in this investment for people who want to carry their profits and principal into phase two. The reason we do this, we've heard from all of our investors over the years that real estate projects have long hold periods, and it's typically 4 to 5 years, and they don't like the fact that they want to hold their money for that long. And whenever we do ground up development construction, we divide it into two phases. Phase one allows us to do a very short 15 to 18 months, equity only, no debt. And then when we get to phase two, that's another 2 to 3 years. So that gives our investors some flexibility into how they want to invest, exit, or continue. The market highlights: Oklahoma City, slow and steady, no big swings over the years. We kind of get the vibe from Dallas, but not the craziness. Although I love Dallas and I'll continue to do Dallas deals and Houston deals and Texas deals in general. But Oklahoma gets the best out of Texas without, I guess, the swings. Unemployment rate is very strong. And this asset class, like I said, is very low vacancy compared to other asset classes, including apartment complexes. Another question we always get is why new development? We have offered our investors both. We buy existing projects and we do value add programs and enhance the units, the amenities, the revenue, and therefore the value for our investors. But when we build from scratch, it's the saying goes as you buy by the acres and you sell by the foot. And what I love about that is you actually create value throughout the whole journey. Instead of maybe relying on the market to boost the rent with inflation or trying to skin the cat where there's some value to be added to an existing community, here we're starting from a very basic playing field, as raw land. We develop the land, we develop the community, and then we create that revenue from nothing, and then we exit in a private equity or to another turnkey investor. So we create value, we control the project end to end, and I like that. More control, more true value add. market conditions as favorable for this niche new development. Unlike apartment complexes, where rent is flattening and construction cost continues to be a problem with the relatively high interest rate, despite the recent cuts that we're all happy about. Asset class that is 55 plus, that is active senior living, given the low supply and the high demand, is great. And we think this is an opportunity for us in Oklahoma City and Texas for the next decade or so. But also the timing now is very important. And I'll show you some of the analysis on the interest rate when we actually go into the vertical construction. We think interest rate is going to be much more favorable down the road, early 2027. But also because we bought the land discounted, we have built-in equity. And this is the time to finish all the entitlement until the economy recovers. So this is why we love the timing, is we can continue to make progress and hit the market when it's hot. This is already a hot asset class. We already have built-in equity. And then whenever we do construction loans, interest rate is projected to be the most favorable time at the end of 26, early 27, which is the end of our phase one, going into phase two for the construction phase. And finally, we're working with the best in town. We have selected our engineering and architecture firms that built our competition. So we know the market, they know the market, they know the city. We've gone through some amazing progress with the city on the zoning and on securing the utilities. And we ended up hiring the architecture of the community that Wes and I modeled when we started talking about building this asset class in Oklahoma. So we have very strong partners, and this will help us move with the minimum amount of disruptions throughout the project. I did touch on this value creation every step of the way whenever it's a ground up construction. So we already bought the land, we de-risked that, it's already discounted. It was a fun story. It was a big car wash developer out of Chicago who bought so much land in Oklahoma City, and they wanted to continue to develop car washes. They were following that hype. You can see it in all of your markets, regardless of what city you're coming from. There's a car wash every other corner. It feels like there's more car washes than Starbucks is right now. And that's not typically a good thing. And that's what we felt. So our brokers, we look at deals every year. We look at probably 100 deals. We are inside this real estate market, and we hear about all these stories. And I tell my team and all my brokers, if there's no story, I don't want to look at a deal. And one of those stories was this one. The car wash developer bought so much land and they didn't want to continue to develop car washes, and they sat on the land for more than 2 years. So that was a nice entry point for our negotiation. We made an offer, and I think they rejected the offer. And then 9 months later, the land was still there. They initiated, and we said, okay, here's what we're going to offer. And they accepted it. So we love that situation every time, especially for out-of-state investors that typically don't understand the local market well. And it gives us the opportunity to create equity and returns for our investors before we even start. So that's done. Then we're going into entitlement phase. This is where we're going to actually finish all the planning, work with the city, the engineering, and finish that. And I'll show you a detailed timeline of how we're going to do that. Then we get all that done. Then we develop the land. We run the utilities, we run the sewage, the streets. And every time we touch the land, we raise the value of the land. Every time we get an appraisal after we touch the land, it's now a developed land. So that takes us to the end of phase one. And then phase two, we're going to build the community, we're going to rent it, and then we typically sell that community as one turnkey investment for a private equity group. Or if we do love the revenue and we see a long run demand on it, we may refinance it and continue to enjoy the cash flow. But for phase one, we're gonna do the land, finish the planning, finish the architectural and engineering, develop it horizontally, and then exit. I kind of touched on why lifestyle 55 plus. So I want to make sure I get that question all the time. Why is it assisted living? Is this going to rely on government assistance? Is this going to be full of nursing and catering and heavy operations? And the answer is no. So assisted living comes after typically a 55 plus community where it's more of a dependent living. This is an independent living for our younger seniors. It's not continuum of care. It's not memory care. So that's not what we're doing. What we're doing is a very intimate, lifestyle-rich community that is just for adults. No kids, no parties, no noise, gated, safe, fun. We will have a mix of units in the community. So we'll have some single family houses, some duplexes, and some quads. It depends on the size and what people are willing to pay for those. It will be community with lots and lots of amenities, lots and activities, and it will be also a little bit premium, so it's more immune to any potential recessions that everybody's anticipating. A little bit about us. Hopefully by now you know who we are and what we do. My name is Al Salus. I'm partner with Baha and Yusuf and my beautiful InvestStream team, working in the real estate industry in the past 4 years. Uh, with blessing of God and the hard work by the team, we've been able to accumulate 1,500 doors, some 300 plus million of assets under management or in development. We were blessed to work with the best in the industry and learned from a lot of people who have been doing this for a while. And this is a project that is led by InvestStream in Oklahoma City. We know the market very well. I lived there for 12 years. Wes lived there for probably 20 now. I've done a lot of businesses, a family in restaurant and hospitality space, in multifamily development. We know the market very well, and a lot of developers and investors don't understand Oklahoma City, and we actually like that. We are partnering with the best. Bocas Payne is our architectural firm. Red Plains is our engineering firm. We also consult with John Burns, a reputable research and consulting firm that we get all the data from to make sure that we have no bias in our assumptions. And you'll see that in the data. And we also work with Syndication Council on making sure that this is SEC kosher and we're doing the right things when it comes to the legal structure. David Payne, very experienced gentleman who worked in Oklahoma City for almost 40 years. One of the biggest architectural firm in Oklahoma City. He did merge with Bruce Bocas, hundreds of projects, but most notably, Wes and I were looking at what should we do here, who should we hire, and we started digging into who built our competition. And we narrowed it down to three architects. We talked to all three, and we ended up working with David. He's a great person. He understands real estate as an investment. He understands real estate as a community. And so he combines this sort of practical architectural design when you get we told him what we want and he gave us more feedback on what the community should have, and then he started optimizing it for us already on how to make more out of the land that we have. So he's a great person to partner with. Greg Massey, the same. He's been in the business for years. He knows everybody in the city. Um, Whenever we did the zoning, he cut through the noise, found us a couple of old easements that we can use, public easements that we can use. He talked to the city about not having to completely rezone the property. So far, no red tape, no hiccups, and he's very experienced also on the civil side, and he will allow us to optimize our spending on the way we're gonna grade it and create all the money that we're going to spend, let's say, on the horizontal development. Very well connected, gentlemen. All right, enough of the build up. Let's look at what the project looks like. So this is the northwest quadrant of Oklahoma City, close to the beautiful Lake Hefner, where no motorized boats is allowed. So this is a fun lake that everybody in Oklahoma City loves for biking, for all the water sport activity. We actually bought a medical office building in this corner. I don't know if you see my cursor here in the northeast corner of the lake. Same road that our senior community will be on. As you can see, there's a major hospital, Oklahoma Heart Hospital and Mercy Hospital in close proximity, Integris Medical Center, surrounded. This is our property here in the red dot, surrounded by a couple of churches, high school, very residential area. And you can see it's already built. This is a very established community, and that we were able to pick up one of the last lots in the area, which is always a great thing for a senior community. You don't want senior communities to be way out there in the suburbs. This is a zoomed in version of the project. So you see here, this is a 7.5 acres, full frontage on a major road. That's a council road, if you were wondering what council is. Around it, everything is built. Even this weird shape development area is already built. This is an older satellite photo. So for the most part, there's not a lot of lots left around us. Backed by a green belt, which we intend to maintain and preserve as much as we can for our community. Another more zoomed in version of that. Behind us is a small creek, establishing that green belt. There's a self-storage area that is accessible from the other road. We plan to divide this property into two lots, 6.1 acres for the senior community and 1.3 is for sale. As we're building this community, this is a very good tactic that we always do. We try to build a community, create even more traffic, which will increase the price of the retail lot. Here's some conceptual designs that Wes and I are working on with the architect. We like it to be low density. Low density means it's not cramped. It's not a hotel. It's not a 3-story building with elevators. It's still gonna feel like a community with a lot of green space, with a lot of walking trails. And it's always gonna be a single story. So that's what we're focused on. I talked about the amenities, fishing ponds, spa style swimming pools, massive clubhouses, tornado shelters, walking trails, etc. Yes, we will have a yoga studio as well. All right, to the highlights of the building or the community we're building, it's going to be in Northwest Oklahoma City, 65 to 70 units. And the reason it's a range is because we're still working on those details with the architect to maximize our utilization of the community. And it's going to be a lifestyle Class A property. Like I mentioned, it's going to be a senior community, and selling the retail lot is just a bonus that will add to the returns of our investors. Here's the initial conceptual plan that we started working with the architect on. As you can see, this is a gated community. We're building it as one unit. Very dense when it comes to like how intimate these units are to each other, but it's still a low density community. So there's not going to be yards necessarily. Everybody feels that they're living with their neighbors, around their neighbors, to create that sense of community. And you'll see that the clubhouse is kind of centralized in the community, so everybody is within walking distance. to the clubhouse that will have the pool, the gym area, pickleball, and then the safe room for the community. The finishes are going to be upscale, walking trails all over it. Like I said, backed by that green belt, which we are preserving. We're using the detention pond as a nicely landscaped detention pond that will be used as a fishing pond as well. There's going to be tons of gardening spaces for our residents and a very active clubhouse full of activities. We're actually going to hire not only property managers, but we're going to actually hire an activity manager to make sure that the week is full of activities for our residents, catering, grocery delivery, laundry delivery, bringing medical services to the community, bringing also personal care services to the community. So we're trying to keep the residents in the community as much as possible. These are some optional designs that we gave to our CBRE agent for what can be done in a 1.3 acre lot that we'll be selling. So one option that we shared with them is that 1.3 acre can house 2 5,000 square foot offices, urban offices. Option 2 is we can have 2 drive-throughs, retail drive-throughs as well. And then option 3 is a daycare. So you can see we have a few options for the sale of that adjacent property for anyone to pick them up and build on the traffic that we're building. All right, so what are we doing in this project? Phase 1, we buy the land and we develop the land in a nutshell. So we go through the zoning, which we already finished, the architecture, the engineering, and the permitting. And then we actually do the grading, the sewage, the utilities, the roads, and be ready to build the units. This will take us towards the end of 2026. And then we get into phase 2 when we actually build it, fill it, sell it. And that's our way of doing our projects when it's ground up development. So we're going to develop it and we get it to a place where it's around 90+% occupied. And then we sell that project towards the end of 2030, sorry. Here's the phase 1 timeline. We are going into November, and that's the beginning of our project. We're going to finalize all the site planning with the architectural firm into early 26, starting with the site permitting, into the building permitting, and then the groundwork starts by clearing the trees, grading the lots, running the horizontal utilities, sewage, water, etc., digging the detention pond, and finalizing grading. And then that will take us into summer next year, but we allow ourselves for another quarter to go through the financing of phase 2. So the end of phase 1 is officially done when we close on phase 2 loan, construction loan. What's nice about what we've done already, site zoning is already done and public easements are already secured. On the land, we did buy it at $2.15 per square foot. And the big nice surprise that we have after we've done our initial due diligence is, as you saw from my drawing earlier of the conceptual site plan, it's fully utilized. We're not going to lose a lot of that land for easements or what have you. We only have that detention pond, and that's okay. But according to our engineer, I think we're like 85+% buildable on that lot, which is huge. The comparable sites for that area in Oklahoma City, especially with that frontage on the main road, are selling for $6 to $7 a square foot. So you can see that initial discount that we're enjoying day one. Like I said, zoning and public easements are already done. Architecture and engineering firms are selected. We kicked off those designs already, and those are underway. And we actually started to screen the general contractors that are going to be working on that site into 2026. I'm going to tell you a little bit about Oklahoma City, but we're also going to share these slides with all the investors to have all the details at their fingertips. Like I told you, Oklahoma is a top retirement city. It's also houses Edmond, which is close to the site. It's one of the top 50 cities to live in the US. 29% of Oklahomans are 55 population. Oklahoma has been investing a lot in reviving the city, making it a better destination for young and seniors alike. They have already invested 1.8 billion, I think, over the last decade or so, with 1.1 billion to go. A lot of it has been just to make the city more livable and fun. Parks, senior wellness centers. The Thunder just won the NBA, which was a huge thing. They're actually expanding that. There's a lot of innovations and art districts. And I'm hearing that there's also an MLS soccer team moving into Oklahoma City soon. So the city has been a magnet for younger and adults alike. Some more data around where they're spending the money on the parks and the pedestrian projects. The locations of those expanding around Lake Hefner, but mainly in the center of Oklahoma, and then sort of expanding into the suburbs. A little more data about the fun stuff that is happening. I'll let you check those when you read the slides. All right, this is the fun part. Okay, what's the money? Where's the money on this deal? So we are raising 2.875. In fact, we already raised around 700K on this deal. This is a preferred return set up for phase one. It's 15% annualized for our investors. No waterfall splits. 100% of the returns goes to our investors until they hit that 15%. Minimum investment is 50K, and the target investment period's 15 to 18 months. One bonus for our phase one investors, if they choose to continue their investment into phase two, they will get a favorable waterfall split of 80% for the investors, 20% for the sponsor, versus what we typically offer for phase two investors, which will be 70-30. Some more data around the competition that we modeled when we wanted to build this community. These are 3 communities in Oklahoma City that are doing very well. You'll see that the rent is very aggressive and their vacancy is almost minimal. So rent for Oak Haven is 2.3 average, 2 to 4%. And you can see like what amenities they're offering. There's actually an in-house Italian restaurant, massive clubhouse, and nice walking trails. Luigi is the name. Laurel Springs is another community that we love, and we liked how they're set up. They're renting at 2.25, vacancy is 1 to 3%, and they kind of upgraded the pool to be a spa resort style pool. They have a lot of gardens that seniors really love. Highland 55 is also popular. This is the one that David Payne, our architect, has designed. That one is a 6 months wait list. So still huge demand in the area and not a lot of new supply coming. That one specializes in a pickleball court, indoor gym, and a massive clubhouse. Some of the assumptions we made on this deal to make sure that we are conservative and backed by third-party data. Market rent comps, as you saw, is in the 2.2 plus, but the range was 1.9 to 2.4. We modeled it at 1.9 to be conservative on the lower end. The projected market exit in 2030, according to CoStar, is going to be between 5.5 to 5.75. Obviously, that's a crystal ball projection based on where the economy is going and based on the supply demand, but we modeled it at 6.5 conservatively. The land was purchased below market, and the vacancy, although we see it in a 1 to 3% range, we modeled it higher at 5%. I'll share some data around our deal when it comes to the breakdown of where we're going to spend the money. So the land was $700K for 7.5 acres. Here's a breakdown of the soft cost at a totaling at 612. This is the site work breakdown estimates when it comes to grading, drainage, and paving, totaling at 762,000. The public utilities, running the water and the gas and the fire hydrants, etc., that will be around 728,000. And finally, the sanitary sewer, running our sewer lines and connecting that to the city, is around 300,000. The summary of that, as you see here, is around 2.87. Our fee as a developer is 4%. All the returns goes to the investors until they hit their 15% annualized return. And this is all 100% equity for phase one. This is the view of the future phases. So this is the full project estimates whenever we finish it end to end, including phase two. That will be around an $11 million project with 33% projected equity. Again, we're not going to know the exact numbers until we finalize the design and get closer to that phase two, but those are good projections that were validated by our GCs. Here's some exciting picture that is actually, we pulled this from CADM, which is a known interest rate predictor tool that a lot of the industry experts use for their interest projections. As you saw yesterday, the Fed cut the rate another 0.25, which is great news for the real estate market and the economy in general. But we're still here. This was the view as of the 1st of October at 4% so far, which is an indication of interest rate for loans. And you can see that it's projected to continue to drop until late 26, early 27. And if you see what that data looks like from a projection point of view, it's around 3.11. Typically, interest rates are around 1.5 to 2% higher than this SOFR term. But you can see we're here to drop. We anticipate to drop another 0.75 to 1% by the time we actually need the loan, which is actually our timing for construction. So it happens to be that these projections, which are nothing is guaranteed, but these projections align with when we're actually going to take the loan for phase two. I'll recap the investment detail. This is a 506B investment opportunities opened for accredited and sophisticated investors. This is a private offering that cannot be shared with others. It's a 55 plus Class A active senior community. The strategy is to buy the land, finish the entitlement, and finish the horizontal development. 15 to 18 months, 50K minimum investment, 15% annualized return, no splits for phase one. And the distribution will happen at the end of phase one, which is officially closing on the construction loan for phase two. There's a lot of questions that comes on the tax advantages when it comes to ground up construction. Although there is no tax advantages in phase one, there will be tax advantages in phase two for those investors who continue and roll their investments into phase two. So A, there's no tax event when they get their returns of phase one, and B, we will see depreciation in phase two. Here's a sample return for the investment. If someone invests a 50K and we end up finishing the project within 15 months, that would be the return. And if we finish in 18 months, that will be the return. And you can see it here for $100,000 or $250,000. One key thing that I would like to highlight to our investors is their ability to roll or exit. And even if they take their returns from phase one and roll their principals into phase two, they will not have a taxable event. We will postpone and defer those taxes till the end of phase two. So that's another benefit for our investors. They can choose to roll their principal and profit into phase two, or take their profit and roll their principal into phase two without a taxable event. We're accepting cash investors. We're accepting self-directed IRA, solo 401k as well. People can invest their 401k funds by converting those into a self-directed IRA if they're vested. And if you have any questions, please ask your financial advisor or CPA, but we're happy to assist and connect you with some custodians that can help you in that process. Minimum investment is 50K, and we're accepting investors based on a first funded basis. Our process is very simple. You will review the offering, ask us as many questions as you like, consult with your financial advisor and legal advisor. We have a secured third-party investor portal. You can e-sign your documents and fund your investment directly from that portal. It's a very simple process. You can scan this QR code to get more access to the legal documents, to the investment details, and to connect with our team as well. And I'll finish with some frequently asked questions, then we'll follow it up with the questions in our chat and we'll open the lines. I kind of already addressed the IRA funds, but I'll just cover it one last time. A lot of the times our investors say, can I invest my 401k? The answer is yes, but consult. And we will work with you to convert your 401k to an IRA and then invest directly without a penalty or taxes. The first distribution, this is a ground up construction project, so there will be no cash flow during the project. And the returns are going to come at the end of phase one, which is that 15 to 18 months target. A lot of our investors have so much on their minds. They're watching the news. There's a lot of uncertainty in the marketplace and in the economy in general. So I get these two questions all the time. Construction costs are high, interest rates are high. Why are you developing now? And I would say not all projects are created equal. That's my answer. We're not using debt. We're not relying on where interest is going in phase one. We're actually buying time to be ahead of all the other developers who are sitting on the sideline. We already secured the land discounted in a very good built and established area. And I would also say that because of this is a lifestyle-based active senior housing, as you saw, the demand is very high, supply is almost non-existent in Oklahoma City, and it is a target city for retirees. So we see a huge opportunity to continue and develop against all the odds because it is worth it. What's the impact of potential recession on this project? We have some good news, at least in the last 24 hours or 48 hours. There is now a trade deal struck with China. Hopefully that would ease some of the tensions on the tariffs. Brazil is the same. I know they're working on a deal with India. But also interest rate has dropped twice in the last 45 days or so. So this is great news. The Fed is easy, making it easier for investors to invest, for developers to develop, and that's a good sign that things are less uncertain. But in case there is a recession, this project is positioned well because it's for upper income, wealthy demographics. And the actual selling point for these communities, for the tenants, is don't downsize into a homestead, downsize into a lifestyle rich rental community and keep that money out of your big mansion that you're selling. So I'll pause here. Sammy, I'll ask you to uh, discuss or share the questions that came through, and then we'll open the lines for anyone who has any questions.
I have a couple of questions. I was actually trying to type one of them. You mentioned that on the 1.3 acres, you're considering a daycare. Why would you consider daycare next to senior living?
The fundamentals for daycare has nothing to do with the senior community. I mean, obviously, it's going to be completely detached, but the fundamentals for daycare is similar to the fundamentals of a senior community. And that's an established neighborhood with tons of rooftops and families, safe, close to where people live. And seniors are looking at it from a different angle, where they want a safe community in very established areas, close to hospitals, grocery, amenities, etc. So they're not related, but the location dictates that you can do both next to each other. It's just one of the options for, we're not developing daycare, we're not developing the retail, we're selling the land, but we're giving the developers an idea of what they can fit in that corner.
How are you accounting for that 1.3 acres? Is it like what I mean by that is, as an investor now, I'm getting in phase one, and you're explaining that the 7.5 is where we're doing the project, but the 1.3 is just an extra land, right? So in my mind, I'm an investor, I'm thinking the 15% I'm getting, is it just on the project, or does it include the land? If I exit, am I benefiting from that piece of land, as an investor in phase one versus phase two?
Great question. So the total land size is 7.5. We're dividing it into 6.1 and
I'm sorry.
1.3.
That's what I meant. 6.
And whatever we sell, that retail lot is just bonus to our investors. So that will go straight into the phase one returns that will enable that 15%. I didn't mention that we have a plan B. If we don't have great offers on the retail lot, we're just going to expand our senior community. So instead of developing 65 to 70 units, we believe we're going to squeeze another 5 to 6 units in that lot. But because it's like a perfectly rectangle shape retail, we believe that we're going to be selling that lot, and that money will be just sweet equity coming back to the deal. So think of it, hey, we bought the land for 700. If we sell that retail lot for 200,000, 300,000, that's just going to build more equity for our investors.
Thank you.
Yep. Good question. Any other questions?
Yeah, hi Al. Annie here. Thanks. This is very informative. I appreciate it.
Hi,
Um,
Hani. Thanks for joining.
yeah, can you talk a bit about some of the, spend a little bit on the amenities that you plan to include in terms of, let's say, green space, dog park, uh, parking spots, that sort of thing? I know it's conceptual still, but maybe you can share some of the concepts that are sort of you consider must-haves and what are nice to have, which may or may not be in.
Sure. I'm going to go back to the slide that has the amenities, but I'll address those. Yes. So the way we're designing the units, I know it's hard to probably read it from the screen, but If you can see, every unit will have two-car garage. Every unit is a single story. Some buildings are 2 units, some buildings are 4 units. They will have a nice front yard, backyard, depends on the position of that unit. We have pergolas, we have gardens, we have guest parking, either on the driveways or dedicated guest parking in 2 areas of the communities. We're trying to keep it as a loop, so everything is within walking distance, and visitors and adults can actually walk on the walking trails, but also it's a gated community and closed up, so they can walk in the main road. I already talked about, like, we're gonna have a safe room, we're gonna have a massive clubhouse, pool, indoor gym slash yoga studio, and sports studio in general. We have a fishing pond. We're also gonna have a lot of services delivered to it. So think of it as amenities and activities in general, and we'll leverage the pool and the indoor gym and the clubhouse for those events and or activities. The design of the units themselves, they look like homes. So I'll refer to this picture more because it's the most representative of what we're thinking. So if you see here, it looks like separate homes, but they're not. They're just attached and you can't see it. But people will have privacy, they will have front porches, but they're still kind of close to their neighbors and creating that sense of community. So it will look like a small home with high-end finishes, but major emphasis on the clubhouse, on the gym, on the pool, on the gardens, and on the walking trails. Does that answer your question?
Yeah, thank you. Just some observations because my in-laws used to live in something similar to this. Um, Something that is typically desirable by this demographic, uh, because at some point, some of them prefer not to drive or tend to lose the ability to drive for one reason or another. Things like, um, I mean, this could all be provided by third parties, as you mentioned, transportation to nearby shopping or malls or what have you. In addition, of course, to the delivery of things that you already mentioned, walking trails, and some component of children activity, even if it's limited, like a little playground or whatever. Because what happens then is, even though you don't have a lot of children living there, some of their grandchildren or what have you, visit, and if there's really nothing to do, then it's pretty boring and sort of unattractive to those children. Just some experiences that I
No,
wanted to
that's
share.
amazing. Thank you for the feedback. I'll definitely follow up with you on some design concepts to include and to consider. But yeah, absolutely. I mean, there's a lot of intergenerational aspect to these communities where you know 55 is not old, and then you
Yeah,
may choose to not go to assisted living and live there, and as long as you're able and active, we see people deep into their retirement age still live in these active communities, and they get guests, and they get like you said, their children or grandchildren. The other thing is, when we were working with the architect, we had talked about, well, they actually told us, like, you make sure that you have extra rooms. There
right.
was a lot of talk on doing one-bedroom units, and that's how I felt like the other communities that we were modeling, we were focused on. I think 2/3 of them were one bedrooms. And when we talked to the architect and our seniors who kind of helping us, like you are suggesting some suggestions here, they said no, do 2 bedrooms always. It
Yeah,
might be a studio,
absolutely.
it might be just an extra room for guests, it might be just an extra room, even if they don't use it every day. So that's what we're going with. We're not going with any one bedrooms. We're going 2 bedrooms or at least 1 bedroom, 1 studio, or 1 flex room. And in some units, we're going with 3 bedrooms. That would
Yeah,
be
okay.
not the majority, but some.
Yeah. And just for indicative purposes, given, let's say, the average or the range of um, square footage you have here, what will be the anticipated range of rents? And how does that compare, let's say, to, other living options? Not necessarily, independent living or 55 plus, but let's say some other mid to high end apartments.
Yeah. So the rent is more than the nicest apartments, but it's
Okay.
not like assisted living. Assisted living is very expensive because of the senior care,
Yeah.
the nursing, and the catering. But this one is kind of like a fancy apartment,
Yeah.
but having a more home feel to it. So we've seen the rent at north of $2.25 dollars per square foot. The best apartments in Oklahoma City are in the $1.92 a square foot, so it's a little more premium than the rent in any apartment. Um, we also
What would
saw,
that
obviously,
translate
it's less
to?
expensive than owning a home, so it's right in the middle. So it's a little more expensive than living in an apartment. It's less expensive than owning a house.
That makes sense, but like, what are we talking about then when you translate that to the actual typical sizes?
Yeah, so the size range for a 2 bedroom, we're gonna start at 900 to 1100 square foot.
Uh-huh.
So it's gonna be almost like a house, and then it will go up to 1650 square foot. Again, those are not final, so don't quote me
Okay.
on those specifically, but that's a range. We're gonna be between 1,000 and 1,500, but the majority of the community is going to be around 11 to 1,300. So it's a
Okay.
good, decent size house, and the rent is going to range. I have to do the math here quickly, but you can multiply it by $2 roughly.
Yeah, sounds like 2,500 to
Right,
3,500.
2,500 to 2,750. Correct.
Yeah. Okay. And that's reasonable, right? Compared to let's say the higher end, but compared to other states, for instance, because you mentioned there is a tendency for folks to move to Oklahoma City from Texas or from other states because of affordability potentially. And so that range, I think, is quite reasonable.
It's better than Houston and
Yeah,
Dallas,
that's for sure. Yeah.
but still competitive enough for Oklahoma City. Yes.
Okay. Thank you.
So yes, people can move to Oklahoma City. It's an open invitation.
Thanks.
Amazing. Thank you, Henny. Appreciate it. All right. Well, I know when one question comes, more questions come. So we'll keep the line open for more questions.
I just want to confirm that the tax deferral will only be for the people who complete phase two, roll to phase two. But the ones who exit after phase one, that will be taxable for them, right?
Yeah, we have to play by the rules.
I'm just trying to understand.
We love the IRS if AI is recording. Amazing. Well, thank you everyone who attended today, and for anyone who's gonna be watching this recorded webinar. Have a great evening and look forward to hearing from you.